For years, the global financial system has looked stable on the surface. Stock markets keep going up, governments keep borrowing, and most people believe the US dollar is untouchable. But behind the scenes, something massive just shifted. China quietly made a move that most people ignored. No tanks, no sanctions, no war, just code. And that move may have just exposed what could be the largest financial debt bomb in human history. America's $318 trillion total debt exposure. Before you panic, before you sell anything, before you listen to the noise, watch this carefully, because this is not a sell everything story. This is a positioning story. Let's start with the number no one likes to talk about. When people hear US debt, they usually think of the national debt, which is already over $34 trillion. But that's only the surface. When you include government debt, corporate debt, household debt, and funded liabilities derivatives tied to the dollar, the total exposure linked to the US financial system explodes. That's where the $318 trillion figure comes from. It's not money sitting in a vault. It's promises, contracts, IOUs, and assumptions, all built on one thing: global trust in the US dollar. As long as the dollar remains the uncontested global settlement currency, this system survives. But what happens if that trust starts to crack? This is where China enters the story. For years, China watched the dollar dominate global trade, oil, commodities, international settlements, all priced and cleared in USD. That gave the United States enormous power, control over payment rails, sanctions, leverage, and limited borrowing ability. China understood one thing very clearly: you don't defeat the dollar with force. You replace it with infrastructure. And that's exactly what the digital yuan is. The digital yuan is not a cryptocurrency. It's not Bitcoin. It's not Ethereum. It is a central bank digital currency, fully backed and controlled by the Chinese government. And that's what makes it dangerous to the current system. Because unlike the dollar, it settles instantly. It doesn't rely on SWIFT. It need use banks. It works across borders without permission. China has already tested it in cross-border trade, energy deals, belt and road countries, regional settlement systems quietly. No headlines, no hype, just execution. Here's the key point most people miss. The digital yuan is not meant to replace the dollar overnight. It's meant to give countries an alternative. And the moment an alternative exists, pricing power shifts. Even if only a small percentage of global trade moves away from the dollar, the impact is massive. Why? Because the US debt system requires constant global demand for dollars. Less demand means higher interest rates. Bond demand more. Expensive refinancing pressure on the entire debt structure. That's the debt bomb. Not an explosion, a slow destabilization. Now let's talk about the timing. Why now? Because the world is changing fast. Sanctions are being weaponized. Trade blocs are fragmenting. Countries want sovereignty over payment. And fiat systems is eroding. China saw this coming years ago. That's why they built digital payment rails, alternative clearing systems, currency swap agreements, gold-backed trade. Digital yuan is just the final layer. But here's where people get it wrong. This is not the end of America. This is not the collapse of the US tomorrow. And this is not a signal to panic sell. In fact, panic sellers usually lose. The US dollar is still dominant. US markets are still powerful, and capital still flows towards safety in times of fear. But the rules are changing, and smart money moves before headlines confirm it. So, what does this mean for investors? First, understand this. When debt systems are stressed, governments don't default immediately. They inflate, they devalue, they reprice assets. That's why during debt cycles, hard assets outperform scarcity matters. Real value beats paper promises. This is why gold, silver, commodities, and strategic assets always re-enter the conversation during currency shifts. Not as get-rich-quick trades, but as insurance. Now, let's address the emotional trap. When people hear $318 trillion debt bomb, they freeze. Fear makes people do stupid things, selling everything at the bottom, chasing hype at the top, listening to influencers who profit from panic. This is why the title says, "Don't sell yet." Because transitions don't happen overnight. They happen gradually and reward those who stay rational. Here's the bigger picture. China's digital yuan didn't collapse America. It exposed the fragility of a system built on infinite borrowing. It reminded the world that reserve currency statuses earned trust can shift and power. Follows infrastructure, the US still has time, still has leverage, still has innovation. But the monopoly is ending. And monopolies don't disappear. They compete. So what should you actually do? Not financial advice, just logic. Stay diversified and overreact watch. Currency trends, not headlines, so understand where real value flows during transitions, and most importantly, stop thinking in terms of collapse. Start thinking in terms of rebalancing. History has shown us this pattern before. British pound, Dutch guilder, Roman dinar. These reserve currencies don't die suddenly. They fade, while new systems quietly rise. China's digital yuan is one of those systems. Not the only one, but a very important signal. The real danger is not debt. The real danger is ignoring change. And right now, change is happening faster than most people realize. If you made it this far, you're already ahead of 99% of viewers. Because understanding beats reacting, and positioning beats panic. If you want more deep breakdowns like this, no hype, no fear, just real financial shifts explained simply, subscribe. Because the next decade won't reward emotion. It will reward awareness.